Thank you, Neil, and thank you everyone for joining us today. I appreciate your time and looking forward to talking to you a little bit about the Assure story. Here's a quick look at our safe harbor language. And now jumping in, Assure is a healthcare services company. We are currently dual listed on the TSXV in Canada and the OTCQB in the United States, with aspirations to uplist in the near term to NASDAQ. Assure is a best-in-class provider of outsourced interoperative neuromonitoring. We also complemented that core business in the first quarter of this year, by launching a telehealth offering for professional neurology services relating to interoperative neuromonitoring. We intend to be a best-in-class provider, and we are Joint Commission accredited. And by focusing so intently on clinical care, it has been a main driver for us having a very high surgeon retention rate of over 97%. Today, Assure is in 11 states. We did nearly 10,000 procedures last year. And as you can see on the chart on the bottom of the slide, we've seen our case growth expand rapidly over the last few years, including last year. Even with the impact of COVID, we grew by over 54%. Our expectation is that we'll grow by more than 70% in 2021. We think we're going to have a similar rate of growth in 2022. We work with 191 surgeons at 127 hospitals and medical facilities, and we employ more than 80 revenue-generating technologists. In terms of what is interoperative neuromonitoring, it is the use of electrophysiological methods, typically EEG and EMG, to observe the functional integrity of neurostructures, neurogateways during complex invasive procedures. So think about procedures like open heart surgery or brain tumor surgery, deep spine surgery, total hip replacement, things of that nature. And what Assure provides to surgeons is immediate feedback and warning, if necessary, before the occurrence of a neurological deficit or permanent injury can occur. So things like heart attack, stroke, partial paralysis, or worse. Interoperative neuromonitoring is considered the standard of care in the United States. It's recommended by the American Society of Anesthesiologists. It is increasingly integrated into medical school curriculums. About 1.4 million procedures used interoperative neuromonitoring last year. And the tailwinds here is a growth in the aging population, and also a growth in instances of chronic disease. Often those go hand in hand. And as a result, there are more surgeries, complicated surgeries, that require interoperative neuromonitoring. In terms of what type of procedures interoperative neuromonitoring is used for, historically, spine has been the deepest penetrated and remains so to this day. And then it's trailed by orthopedic and neuro. But we're increasingly seeing interoperative neuromonitoring used in additional surgical verticals, including ENT and vascular. This is probably the most important slide in the deck, and this is a look at what Assure does, and I'll also talk through how we generate revenue. So at the bottom in the blue box, that is an operating room. The person at the computer screen is an Assure technologist. That's an employee. We only hire trained, board-certified technologists at Assure because they provide the best level of service to that surgeon. We also pair that technologist with the same surgeon in all of that surgeon's surgeries. And that helps build trust and rapport. That technologist becomes a core part of that surgeon's operating room team. And that technologist is reviewing the patient's neurostructures, their neurogateways throughout the procedure, and relaying information back to the surgeon in real time. Now, the technologist in the operating room is supported by the person in the orange box. That's a telehealth neurology services provider, typically a neurologist, occasionally an audiologist. And that telehealth neurologist is providing kind of a belt and suspenders type of support to the surgeon. They are also reviewing that patient's neurogateways, neurostructures throughout the procedure. They are also relaying information in real time, both to the technologist as well as the surgeon in the operating room, to help guide that surgeon and help them avoid making mistakes that could cause a significant injury to a patient. So for the technologist, that is a one-to-one model. That technologist is only working on that one case in which they're operating room for. The telehealth provider, however, has a one-to-many model. They could be working on up to 12 cases simultaneously. We at Assure bill, collect, and keep 100% of the revenue associated with the technologist. For the telehealth provider, we are in the process now, as I mentioned in the prior slide, of replacing contractors with Assure employee physicians. And that's important for a number of reasons. First is it helps us scale. As I mentioned, these telehealth neurologist providers can be looking at multiple cases at the same time. It also helps us capture additional revenue and margin on every procedure. Rather than paying a contractor's flat fee, we keep that revenue and margin for ourselves. And additional things that are attractive to Assure is that some hospitals with whom we're negotiating fully outsourced intraoperative neuromonitoring agreements, as well as some insurance companies with whom we're negotiating in-network agreements, prefer for their IOM provider to handle both ends of the process. So both have a technologist as well as a telehealth neurologist provider, and now Assure has both. And we see a substantial market opportunity for Assure by having both functions here, and I'll talk more about that shortly. In terms of our corporate objectives, if you tune into a Assure earnings call, you'll hear us relay an update on each of these every quarter. But the first objective is expanding scale. And as I mentioned, Assure expects to expand our scale in terms of number of procedures by at least 70% in 2021. And that's through a combination of organic growth and M&A. We're also building out, as I mentioned, that telehealth neurologist platform. And finally, we are seeking facility-wide outsourcing agreements with hospitals. We think there's a ton of potential there. I'll talk more about that shortly. Our second corporate objective is negotiating and signing in-network agreements with insurance companies. And this is something where Assure is something of a maverick in our industry. There are very few other IOM companies that are working to partner with insurance companies rather than battle them. We signed our first in-network agreement with Aetna of Michigan in late 2019. And we've ramped that up considerably since then. Currently, more than 30% of our commercial insurance volume is in-network. Our goal is to be up to 50% in-network by the end of this year. And that just makes our cash collections much more transparent, much more predictable. Our terms for collections are 30 to 45 days, which is a substantial improvement from what we typically receive as an out-of-network provider. So it is absolutely a focus for us to continue signing additional in-network agreements. From a cash collections perspective, that has improved drastically in 2020 versus 2019. In 2019, we collected $16 million. In 2020, we collected $24 million, so a 50% increase. And the two primary drivers there are the in-network agreements, which have made cash flow and cash collections much more predictable, much more rapid. But the other key differentiator for Assure year over year and compared to IOM competitors is we brought our revenue cycle management function inside the organization. Previously, Assure had relied on third-party billing providers, which is the norm in intraoperative neuromonitoring. And we found that that process was insufficient for our collections needs. It was highly manual. It was very slow. It was very unpredictable. Since bringing that function inside the organization, we've invested substantially in automating that process. And we made substantial improvements, as I mentioned, year over year, and we expect to continue to improve. And our fourth corporate objective is clinical leadership. What we're doing is we're investing on an ongoing basis in training and development for all our clinical staff. We're also investing in clinical research as it relates to intraoperative neuromonitoring safety and efficacy. We're partnering with the prestigious Texas Back Institute on that, and working through data-driven analysis. And that's something of great interest to insurance companies as we negotiate new in-network agreements. And then finally, touching again on our uplisting, we do anticipate, obviously we are in control of the timing. However, we have submitted what we believe are final documents to NASDAQ, and we do expect to be trading on NASDAQ based on the information we have today by the end of the month of September. So by the end of September, our goal is to be trading on NASDAQ. The next slide, we look at, I think we skipped one there, is our ecosystem of stakeholders. So I've already mentioned a little bit about surgeons, and we look here at their pain points as well as the solutions that Assure provides. And then from a surgeon perspective, as I mentioned, pain points include if they're not working with Assure, they may be working with a provider that uses undertrained technologists. They aren't board certified. They aren't providing that same level of support and service. They may also be working with a provider that does not provide them with the same technologist on all of their surgeries. So someone's being parachuted in. They don't know what kind of quality they're going to get. They don't have that continuity or trust and rapport. We also at Assure take operational services off the surgeon's plate. So things like scheduling, billing, collecting, and other operational matters. And finally, surgeons have the opportunity to participate in a revenue share relating to the professional bill if they work with Assure. And some surgeons we work with do take advantage of that opportunity. From a hospital perspective, many hospitals that are smaller, regional, rural hospitals, for example, don't have the scale or the expertise in intraoperative neuromonitoring for delivering that service in a profitable way. It's often a cost center rather than a profit center. As a result, we do expect to accelerate what's already a trend in intraoperative neuromonitoring for hospitals to outsource rather than do this function themselves. And we are in multiple negotiations right now with hospitals that are impacted by COVID and other issues that have changed their financials, and they are increasingly looking for opportunities to outsource non-core functions like intraoperative neuromonitoring. So I do think we're going to have some exciting news flow on that later this year and into 2022. The third stakeholder group are insurance companies. And again, Assure is seeking to partner with insurance companies and sign in-network agreements. And what we're doing and how we've been effective in doing so is two primary factors. The first is that we come to them with data and analytics that show the type of cost savings that we're able to provide by the alerts we provided to surgeons during these complex invasive surgeries that have helped these surgeons avoid making mistakes that could result in significant injuries to the insurance company's patients, and as a result, drive large payouts. They are appreciative of this kind of data-driven analysis, and it has allowed us to make substantial headway. The other primary factor for Assure being able to sign in-network agreements is scale. As we have grown, as our number of procedures have grown, insurance companies are taking notice. And it's one thing to battle with a healthcare services provider if they perform dozens or 100 or a couple hundred cases per year that impact a particular insurance company. But what if it's hundreds and hundreds or 1,000 or more? Insurance companies take more notice when that scale is brought to bear, and it has had an influence, we believe, on the negotiating and signing of new in-network agreements. And the fourth stakeholder group are patients. And if you or I were on the table for a complex invasive procedure, we would want an IOM provider that is trained, board certified, very focused on clinical care to give us the best possible chance at a great clinical outcome. And that's what Assure does. Here's a look at the IOM industry. And the key takeaways here is that intraoperative neuromonitoring is a larger market, nearly $2 billion. It's a growing market, and it's also a highly fragmented market. And again, intraoperative neuromonitoring is regarded as the standard of care, and it is regarded as such because it saves the healthcare system money by improving patient outcomes and reducing surgical complications. Increasingly, we're seeing intraoperative neuromonitoring applied to new surgical settings. As I mentioned, intraoperative neuromonitoring as an industry is highly fragmented. It's also been kind of chronically undercapitalized, and we believe ripe for industry consolidation. This is a look at Assure's competitive landscape, and we really view our competitors in three groups. The first group are intraoperative neuromonitoring specific companies, of which Assure is one. We're also the only publicly traded member of this group. And most of our competitors that are intraoperative neuromonitoring specific are where Assure was 3 or 4 years ago. They are entirely out of network from an insurance perspective. They are reliant on a ineffective third-party billing provider for collections. They have issues raising capital, and more recently, they're impacted by COVID-19 in terms of their financials. As a result, we have seen a lot of opportunities for M&A within the IOM company group, and specifically that regional local provider line. That represents about 500,000 cases per year. And amongst this group, all three of our acquisitions have come, and we see a substantial opportunity for additional acquisitions from this group because while some of these are great providers from a clinical perspective, they're really suffering financially as a result of billing and collections issues. And we found through our integration process of our existing M&A transactions, the ability to plug these new acquisitions in to our revenue cycle management platform and just start collecting better, especially when there's already a strong cultural fit from a clinical care perspective. The second group of competitors is the in-house market. Those are hospitals providing the services themselves. And again, for smaller hospitals, regional hospitals, providing IOM services yourself very likely does not make financial sense. It's very often a cost center, and we do expect to drive more outsourcing from this hospital provider group. The third group are the bundle providers. NuVasive is publicly traded, Specialty Care is private equity held. And while these are the two largest providers in the space, IOM is a minority of what they provide in the operating room. In addition, while they are, again, the two largest providers of IOM services in the United States, they only represent something like 8 to 10% of the market each. They do about 120,000 cases per year and out of 1.4 million. So again, this is just a really fragmented market. Here's a quick look at some of our competitive advantages versus industry peers. And it's been very critical for Assure's success to really develop and maximize the competitive advantages we have against industry peers. And part of that really starts with the digital transformation we've been investing in. And that is specific in a lot of cases to revenue cycle management. So we have invested heavily in revenue cycle management. We have automated a manual process. It has substantially improved the velocity of our collections, and we're continuing to invest there. We're going to be investing and have been investing in things like data warehousing and AI as we continue to press our competitive advantage in this area. Secondly is the integrated offering we provide. And that, when I'm talking about that, I'm referring to offering both the technical care, the technologist in the operating room, as well as the offsite telehealth neurologist, and being a provider of both. That is not common in our industry, and it really is going to help us, we believe, win new business from hospitals and negotiate and sign new in-network agreements. We invest heavily, as I mentioned, in our clinical expertise. We also have some untapped teleneurology upside. I'll talk more about that shortly. And we've developed a strong track record for successful M&A. Here's a look at our current operational footprint. The states in green represent where Assure is today, and the yellow states are what we believe to be our near-term opportunities for expansion. Assure is also extending our reach within existing states. That's our most kind of profitable way for organic growth. It does require less investment than moving into a new state, but sometimes the opportunities in new states are just too much to pass up. And as we look at potentially expanding into new states, the two primary considerations for Assure are, first of all, whether the new state has an adequate number of surgeons and cases to keep our technologists optimized and busy. And the second consideration, primary consideration, is the reimbursement environment of a particular state. It does vary from state to state in the United States, and we look at reimbursements both from a commercial insurance side as well as government insurance as we help make an informed decision on where to expand. This is another look at our case counts and how they've grown over the past several years. A couple of things I just want to point out quickly here. The first is that the 17,000 forecast for 2021 does not include the potential for additional M&A later this year, and there is a reasonably strong possibility of further M&A later this year. So if that occurs, I would expect our forecast to be updated. And the other thing I would add is that we expect to grow, as I mentioned, by more than 70% this year. We expect a similar rate of growth in 2022. This is a closer look at that emerging telehealth offering for neurology services. And we do view this as probably the single most important growth opportunity for the company. And why it's so important, again, is because it makes all of our existing operations more profitable. We're doing that by just simply replacing the contractor technologist, remote technologist with a Assure physician remote technologist or audiologist, and are able to capture, as a result, additional revenue and margin in every procedure. In addition, by controlling quality of service, as I mentioned, it's a key consideration for insurance payors as we negotiate new and network agreements, and it strengthens our offering as we position to sell directly to hospitals. So the first leg of the teleneurology is what we're already undertaking. We already have two providers on hand that are providing telehealth neurology services right now at Assure, and they're doing it for Assure patients. The second leg will be providing that same telehealth neurology services for other IOM companies or hospitals that have technologists in the operating room but need a vendor or a contractor for the telehealth neurology piece of intraoperative neuromonitoring. The third leg, which is not very far away, is something that we can see getting into even in 2022, relates to adjacent markets for teleneurology. So outside of intraoperative neuromonitoring, there are a number of adjacent markets that we believe our teleneurologists can be cross-trained in. Things like EEG, support for patients that have had a stroke or epilepsy and giving them ongoing care, sleep studies. There's a number of other possibilities as well. And so we see just tremendous opportunity to sell into the same group of hospitals for IOM services for teleneurology, and also these other adjacent markets as well. Here's a look at the acquisition, the most recent acquisition that we completed. We closed this on the last day of April in 2021, a company called Sentry Neuromonitoring. And Sentry is a fellow traveler in the sense that they are Joint Commission certified. They provide excellent clinical care. They have very strong surgeon relationships. But the issues they had and why they were a distressed asset when they were acquired by Assure was because they weren't exactly where they needed to be from an operational efficiency perspective. But the main consideration was that they were really struggling from a revenue cycle management perspective. Sentry had used 3 separate third-party billing providers in the 15 months before Assure acquired the company. They just could not collect like they needed to. And so when Assure saw this opportunity, first of all, Assure and Sentry share our largest market, which is Texas, for both companies. So we were able to have very strong visibility in terms of our collections versus Sentry. And we saw that we were collecting 20, 25%, 30% more than Sentry was for the same procedures, sometimes at the same hospitals, being paid by the same insurance companies in the same state. So by plugging Sentry into the Assure revenue cycle management model, we're able to collect better. And in fact, you can see we did a $3.5 million purchase price, 1.2 million of it was cash. This is a business where Assure has collected nearly $1 million of old accounts receivable from Sentry just since we've closed this transaction at the end of April. So this is very accretive, we believe, for Assure. And this is a big asset in Sentry. Sentry did 5,500 procedures in 2020. Again, Assure did nearly 10,000, so it increases our scale by about 50%. We thought the purchase price was reasonable, particularly as you take into consideration the recovery of old accounts receivable we've already been able to receive. And we are viewing our M&A pipeline and seeing other similar transactions to Sentry out there that we're interested in pursuing. We see a ton of consolidation potential in the space generally. Some factors supporting improving top-line results for Assure in 2021 and beyond. First of all, it's volume. All of our financials flow from case counts, and we again are expecting a substantial increase in case counts, up by 70% plus this year to over 17,000. The second is revenue accrual rates. We have been flattish in terms of revenue accrual rates for 4 quarters now, seeing very little change. That's been stable. In fact, we have signed new in-network agreements at higher rates than our current revenue accrual rate. So, that's a really good sign for what we hope to be ongoing stabilization in terms of revenue accrual rates. The third factor is the recovery of write-downs. Assure did have a substantial write-down, reserve and write-down of old accounts receivable in 2020, and that really relates to the third-party billing provider, which we terminated in late 2019. Assure automatically reserves and writes down any old receivable that's aged 2 years, and we just weren't able to pick up the pieces from the old third-party billing provider quickly enough to collect on old 2018 claims in 2020. That doesn't mean that we aren't still trying to collect on those. And in fact, we've had a good amount of success already. We've already collected over $2.5 million from aged and written down reserved old receivables from 2016, 2017, and 2018 since bringing the revenue cycle management function inside the organization. And we continue to expect to collect a meaningful portion of our reserved and written down receivables. And then the fourth factor supporting improving top line results is the continuing signing of in-network agreements. Again, these in-network agreements are really valuable because they set the price of what will be paid, and also both the quantum and the timeline for when will be paid. And we're at more than 30% of our commercial insurance volume in network currently, and our goal is to be up to 50% by the end of 2021. Here's a look at our balance sheet and cash flow, and we think we've done a lot to improve our financial flexibility over the last, call it 9 months or so. That includes a $11 million credit facility signed with Centurion out of Toronto in June 2021. We also did a private placement equity offering in December 2020 that had institutional ownership participation, substantial majority of which actually was institutional investors, but also included some board and management participation. We've received 2 PPP loans in the United States related to COVID. We've already had the first loan forgiven. We expect the second loan to be forgiven in the third quarter of this year. And again, we've substantially improved cash flow as a result of improved cash collections, and we expect that to continue to accelerate. From a management team perspective, just touching base on a few of our members. First of all, our CEO, John Farwanger, is a Canadian. He has extensive experience both with emerging growth stories as well as with turnaround stories that lead to eventual private equity exits. John Price, our CFO, has good, extensive CFO public company experience. John was formerly from Ernst & Young. Paul Webster is a key player in that he leads our efforts for signing in-network agreements. And in fact, Paul has a lot of experience in this area. Previously, he worked at a company called Air Methods, which is now privately held. But Air Methods is also a healthcare services provider, Air Ambulatory. And over a 5 to 10 year period, Paul's team was instrumental in bringing over $1 billion of revenue that had been out of network to in-network, and completely changed the perception and trajectory of that company by making those cash flows so much more transparent and predictable. It helped increase that market cap size for Air Methods from a couple $100 million to a $2.3 billion exit. Sean Blosser, we brought him in to lead our revenue cycle management function when we brought it inside the organization in early 2020. He has a ton of experience in healthcare billing, in out-of-network billing. He's been a great addition to the team. From a board perspective, I just want to touch on a few of these members. Dr. Ramana is a board-certified neurosurgeon, extensive experience. Stephen Summers, the recently retired CEO of the Colorado Hospital Association. John Flood is a name that may be familiar to some of you investors out there. He was a co-founder and longtime leader at Craig-Hallum in Minneapolis. And, that is kind of Assure in a nutshell at this point. I want to thank everyone for taking the time to listen to this presentation. And if you have any questions or follow-up, please look at the contact information on the slide. We'd be happy to touch base anytime.